What's up, everyone? This is Scott, and welcome to our Thursday get-together. We have a tough topic today. This is one of the toughest topics in trading, and that is the breakup. When do we break up with something that we love? Well, or at least that has made us money in the past, which can lead to love. Don't get me wrong. It's not an easy topic. It's not anything that I can substantially answer for you. Everybody has to decide their own breakup. I can't break up with your girlfriend or boyfriend for you. I can't do it. I can't. But I can give you some reasons why maybe you should or maybe you shouldn't. Today, we're going to talk specifically about the Euro Aussie. And why are we talking about that? Because I've been trading the Euro Aussie for a long time now, at least in the day trading world. We're talking years, plural. And there's been some interesting goings on in the Euro Aussie. And so I feel like what a relevant topic for us to talk about. Of course, if you want to get on the Wednesday weekly newsletter, you go to my website and you click on this button. Been a lot of people clicking in, a lot of great feedback. So do that. If you're watching this on YouTube, please subscribe and or leave comments. I answer every comment. I answer every email. I do it all because I want to talk to you. All right. The day trading version of the Euro Aussie, we're talking about something that maybe you don't particularly trade if you're watching this, but you can use this as an example for something that you do trade. This is a universal lesson, I feel, about breaking up with something that you're trading and if you should. Bottom line, for me personally and for others who are trading the Euro Aussie, it's been underperforming lately. Lately is the key. Long term, it's been a good relationship between Euro Aussie and me and others, but we're talking about lately. And don't we live in a world of what have you done for me lately? Eddie, what have you done for me lately? Eddie Murphy stand up for those who know. But anyway, it's taken some full losses. Now, my day trading robots, if you don't know, most of the losses, almost all of the losses are in a small variety. The way they're configured is you don't always just go to your target or go to your full loss, right? There is an emergency full stop loss in place, and hopefully that hardly ever gets hit. Maybe anywhere between 5 and 9, 10 times a year, which is not that much. But it's taken some of those full as well as some substantial losses also. Now the Euro Aussie, and I don't know what your case is, but I'll give you mine. It's been making money historically very consistently. I have witnessed a 20 plus winning streak, trade winning streak, meaning it won over 20 in a row not that long ago, but it's been losing money lately. So that's like you're in a relationship and it's like things have been going great, but all of a sudden now they're coming home and they've been drinking too much or they're staying out or, this is something that's happened recently. What should we do? Well, have you ever been in a currency pair relationship? It's not easy being in one. You trust your money, you trust your time, you trust the trading, how it trades, the trading methodology that it uses. It's not hard to stop. It's easy to get perturbed, but to make that final decision is not an easy decision. Maybe it is for some people, but I don't think it is. Should we end a relationship with a currency pair? And if so, why? Well, let's go to our little trial now. Let's go to the courtroom and build a case against first the Euro Aussie, right? And this is again, hopefully a universal lesson. Let's say you're trading something and all of a sudden now it's down for the year. Maybe your historical testing has been great, which your Aussies has been great. What if it's had no losing years in live trading and in testing, right? Maybe yours has done that too, right? And then all of a sudden it's negative for the year. Now we sit here on October 12th, 2017, and it's just turned negative in this circumstance. It was positive all year and doing great, really up until a few months ago, a mere matter of weeks ago. But now, as we talk today, it's down. What do we do? All right. Well, that's why we're talking about breakup. If you have had no losing years and we're down for the year, right? If your person that you're in a relationship with has never caused trouble, but now all of a sudden now is drinking or using substances or acting erratically, what do you do? Right? That's where we're at. It's acting erratically for this short period of time. Okay. And thus it's down for the year. Again, another point against the Euro Aussie is that it has AUD in it. Now, I don't know what your particular circumstance is. I'm just telling you what mine is. And I've spent thousands of hours, and I was doing testing before I got on this little talk, right? I spend hours and hours, and AUD day trading pairs are the most volatile, period. Even CHF pairs are not as volatile as AUD. And volatile doesn't mean bad. Volatile means good. You ever been in a volatile relationship with someone? The good times are really good, but the bad times are kind of crappy, right? That's the AUD pair. It's the most volatile day trading currency. We've talked about the Aussie yen in the past. It can streak and go win, 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 and it can take full loss, full loss, full loss, and it constantly trades, and it is a hassle, right? The Aussie US dollar, right? That's the worst one I've ever traded live. I traded that live for a while, and I actually did break up with it because in real life I could not take its erratic behavior. So those two, I have both traded with my own money and just got tired of it, right? Now, you have to decide for you. I'm talking about me. I don't like volatile relationships. I don't like needy people. I like solid, calm, drama-free. So this is not solid and calm for these two currency pairs. And guess what? It has not been that calm lately in the Euro AUD. So that is another point against trading this. It has AUD in it. And maybe no one who likes solid calmness should ever trade AUD. It is something you need to decide because it's not a simple walk in the park, right? Now, keep in mind, all of these Aussies are profitable over 10, 12, 13 years, but they are way up and way down and can have entire losing years. They can, and they do, right? Now, up to this point, the Euro Aussie has not, but I'm just saying, we have now a history of AUD. Point 3 against. It's not one of the big three. Do you know what the biggest three currency pairs, if you're a Forex trader, you know what the big three on volume is, and it's not even close? You know what they are? I'll pause for dramatic effect. I love doing that. It is pound dollar GBP USD, EUR USD, and dollar yen, USD JPY. Those are the three. And then it drops way, way, way off. The Euro Aussie is not one of those big three. I have had extremely consistent results with two of those big three. The dollar yen and the pound dollar in testing and in live trading have been pretty much you get what you expect. So why is that, right? Are the big three a little bit more reliable because they're the most heavily traded? Is there any correlation? My brain says yes, that makes sense, that the most volatile, the most stuff that's going on means it can be the most stable, right? Now, euro dollar is great for long-term pairs, but not that great for day trading, just a little tidbit there. But I love euro dollar. When we're talking about long-term charts, I think it's my favorite chart. We're talking daily charts. But anyway, so is Euro Aussie, because it's lower volume, we're still talking millions, right? But you know, when you trade like low volume stocks, you can get stuck, or low volume stocks are very, very volatile. Is it because it's not in the big three? Is that making it volatile? It's something to consider, right? And it looks similar to the worst drawdown period on the graph, right? Right? Let's see if I can bring that up. Let's see. Get over here, get into that, and get into, you see all these currency, these are all the, you saw all those things. Those are all the things I track on a daily basis. I sit around and look at robots. I have a wonderful life, and don't you tell me differently. Okay. Performance graph. All right. This is the Euro Aussie. It's going back all the way to 2003 in testing. You can see drawdown period, drawdown period, drawdown period. When was this? 2009, huh? 2008 drawdown period, 2011 drawdown period. This is the worst one numerically. See this? This is what it looks like. And the reason it looks like this so thin is because there's so many trades. Like look at 2,000, 3,000 trades. Okay. Here's 2013. Look, made a new high in equity, dropped, went on a winning streak, dropped worse, and then went crazy up. Right? Does this look like this? does this look like this? Down, winning streak back up, bigger drop, down, big streak. Kind of similar. Look, down, winning streak up, down worse, winning streak. You see how this is not really out of the ordinary, right? It looks nearly identical to something happened back in April 2013, May, June 2013, July, August, right? Kind of near the same time of year. So it looks like that. It doesn't look worse than that, but that's the case 4, isn't it? Let's get back to the argument. The other argument, which goes along in number 4, probably could have been point number 5, is that there have only been 3 losing months in a row once before. And we're in a stretch on the Euro-Aussie where this would be, if it stands, would be the 3rd losing month in a row. So there's the case against. This is the first losing year. Aussie pair. Aussies are volatile. It's not one of the big 3. Maybe that makes it volatile on top of being an Aussie pair. And we're in a worse drawdown. It looks similar to that, which means we're not in a good spot, plus the 3 losing months. Okay, so you're going to drop it? Where do you stand? Well, don't answer yet. What about the case 4 staying in the relationship? Here are the counter arguments. Number 1 is philosophical. If we drop everything as soon as we hit a losing streak, I mean, we're never going to make it. Do you understand? We will never make it. If you buy and sell an index fund, the safest, best investment for anyone ever, if you sell in 2008 and miss the run from 2009 to 2012 and then get back in at the top and then sell again when it dips and then get back in at the top, and so you realize index funds won't even work. Nothing will work. And I can't say this more strongly. If you drop every single currency pair or trading instrument that you have, as soon as tough times get tough, you will never make it. If you drop everyone in your life, as soon as they have a rough patch, you will be alone forever. If you give up as an athlete, as soon as you lose, you'll never make it. You never make it in anything. Okay, so this is a big deal, and it needs to be taken very seriously. Breaking up all the time means you're not ever going to make it. That's rough. Now, point 2, the worst historical drawdown happened in 2013, not in 2017. This is not the worst it's ever done. We are not there yet. Now, it could. We don't know what's going to happen. It could. And then, do not forget, in that very similar looking 2003, do you remember what happened? 2003, boom. You know what that looks like? You know what well, you see what it looks like. Do you know what that means? 14 winning months in a row after the big losing month in 2013. Over a year straight of winning after the drawdown in 2013, and this is not 2013. Similar, but not. Argument 3, the year isn't over. Yes, it's down, but one winning streak on the Euro-Aussie might be up, might make it up. It trades a ton, right? So what happens if it comes all the way back and you dropped it at the lowest point, right? What if you drop your person you're in a relationship with just because they had, a death in the family, or they lose their job or something? You drop them, and then when they come back, they're looking better than ever. What are you going to do then, right? It may not be a down year at all. This is only October 12th. So where do you stand now? Before you finally decide, a couple other solutions. If you get tired of the losing, just turn it off and wait for it to show winning again. Okay, that's fine. Take the pressure off. I'm all for taking a break. All for it. But you do realize that means you'll miss the winning, right? As it starts winning, you're going to miss all those winning trades. You could have sold out in September 2008 and waited until May or next year or so of next year in 2009. You would have missed a bunch of that 100% move, right? It was about a 100% move up from 2008, 2009. Remember that in the stock market? So you might miss 50% of it, right? But you could take the pressure off and just take a break. Listen, honey, we need to separate. We need to take a little break, right? You can do that, but you might miss all the good stuff in the meantime. You could turn it off now and watch it the rest of the year and see if it does actually turn back around if you're in a currency pair like this. And then start up in January. But again, same thing. You do that, The pressure's off, but you'll miss all the winning if there is some. You could lower trade size. That keeps you in the game, but it doesn't necessarily take you out of the game, and it does take some pressure off. Okay, that might make it easier, and I'm all for that again, but you'll also get back slower because when your trade size dips after losing, you don't make it back as fast. So there are some in-between things. Take a break. Take a separation, right? Take some sort of, oh, we're just going to take a break, honey. Or you could say, listen, we're just not going to spend as much time around each other, but, we still will. All of those, though, miss the connection when it starts winning again, right? So here's the bottom line. If you're going to make it in trading, you have to pick what you like, and you're either in or you're out. That's it. It's full commitment if you want to make it. You want to be an index fund trader, which we'll be talking a lot about because I feel like we can do better than index funds, and I swear by it. But if you want to be an index fund trader, you're all in. That's it. You're in 2008 all the way through. You're in it for the whole ride, or you're not a trader. So you need to make a decide. If you're going to break up now, there needs to be some concrete ironclad rules on what you're going to do in the future. Either you're in or you're out. That's it. The only solid way to make a change, the only solid reason to make the change, right? The only solid path is when you have a bigger than normal losing streak. Well, the Euro Aussie hasn't, right? I think its maximum loss is 5 or 6 in a row, and it hasn't gone beyond 5 or 6 in a row. It hasn't. Or a new drawdown, right? Or you have a drawdown that's historically unprecedented. That hasn't happened either. So the biggest reasons for making a breakup, neither one has happened. Keep that in mind. Or listen, you're just tired of it. You want to focus. And I have written many things, many posts and many newsletters about focus. I love focus on one thing at a time. And if you're trading a bunch of things and you want to get rid of one thing and say, listen, I'm tired of trading a bunch of things. I want to trade one. Then a breakup is right. Break up and never look back and be concrete and totally committed and saying, listen, you're Aussie. I appreciate it, but I'm not going to trade you. I'm going to stick to this, and that's it. But it has to be a complete commitment to something new. It can't be, I don't like it for right now. You gotta be committed. Bottom line is how we handle a losing streak is the key to all of it. It's all of our success depends on it. It is a serious issue. We have to have a plan, and we have to have concrete rules, and we have to stick to it. Otherwise, our trading futures are going to be very dim indeed. All right, let's check some questions, and then we'll get you out of here. Let's roll back. Hello from, oh, cool. Aloha, sorry, I saw Ilima. Javier says, hello from Mexico. Awesome to have you from Mexico. Jonas says, reduce size and keep it going, and that's, I think maybe you wrote that before I said that. It's a great option, right? I like that better than turning it off and waiting, if you want my opinion. And again, your opinion is the only one that matters. I would say if you're committed to trading the Euro Aussie or something like it, reducing the trade size just to get your confidence back, there's nothing wrong with that, right? If you're a tennis player, you go play smaller tournaments for a second before the next major, I'm fine with that. I like that better than quitting altogether. All right? Douglas says, I like things sound and calm, and yet I rage. Jonas says, okay, do nothing. I can turn. Oh, that's interesting. Douglas messed with some trade size in his portfolio. Interesting. Elima says that the time to stay in is right after losing. And I know it's a cliche, but I found that to be 100% true. The moment you start having breakup discussions is the time you should stay in. It doesn't mean if it gets to the breaking point, meaning long losing streaks or max drawdown, that you don't break up, right? Some things are just not negotiable. You can stick with your partner, but if they cheat on you, maybe that's it, right? But up until cheating, maybe you stick with them. It's that sort of thing. But I agree, Elima. Andrew says 99% mental, 1% actual trade. That's so brilliant because I agree 100%. And then, or check to see if small profit target back then might be easier to hit. Yeah, good point, Steve. This particular Euro Aussie, I agree. If we're talking universally, you have a trading system, lower the target. I love that. Pretty low target, though, on the Euro Aussie. But you're right. That's something that I could definitely look at. I've looked at it, but I haven't looked at it in a while. So that's a good idea. I'll look at that again. All right, everybody. That's all for now. There's the Heron course available. We'll be talking more about that. I'm working hard on the trend following course. That'll be out soon. I'll start recording here anytime now. Sold some books lately. People have gotten some real good feedback on my book. Ready to write another one. We're up over 900 on YouTube now, on our way to 1 million. And I totally believe that because I'm a crazy person. There's the contact information. All right, everybody. Thanks for being here. It was a lot of fun. I will see you next week. Check the recording of the video on YouTube. Bye for now.